Hey guys, welcome to the very first of these anchored insights. So it's going to be a very short video every single Wednesday. We're going to teach you something really important about trading, particularly if you're just getting started. And today we're using one of my personal favorite methods, which has made me the most amount of money over the years. And that is very simple, very basic trend lines. So you can see on here, I've got these sort of green and red trend lines. Okay, they go all the way along from 2020 all the way to today. All that you need to do now, this website here is called TradingView. You can use any sort of charting software that you like, and they're all going to have trend lines. Okay, so up here I would just come to here where you got a trend line. Okay, and then you can just draw it on anywhere you want and move it about. The only thing that you're looking for is basically the general trend. So this was the big dip in 2020 of Lazy Boy, you know, that makes the chairs. And you can see it's going up, going up, going up, and then it sort of gets a bit choppy over here. And this is where the price will generally, it'll break down below and then retest the bottom of the trend line. So here you see it's broken down, retested, retested, retested. It's trying to go back up, but unfortunately the market knows it's just not going to work. Okay, it's already broken down and it starts a downward trend. So you can either go short and make money going down, or just basically not trade it. So if you're doing like I suggested in the last video, so the last video right now only has about 5 views. It's an epic video all about how to trade stocks and shares tax-free. So if you're into that sort of thing and you don't like all the accounting of having to work out capital gains taxes and pay capital gains taxes, then definitely check that video out. It explains how you can actually trade stocks without paying any tax. It's very, very simple. Okay, so back to it. Now, what you do not want to do with trend lines is once a trend has been established, so you can see it's come here, check the trend line here, checked it here, checked it here, checked it here, and then you're thinking to yourself, this is a clear and obvious trend. So what I'm going to do is I'm going to go short the next time it hits. Well, it kind of missed it here. Then you go short here, and this just happens to be the bit where it actually breaks out and goes up. So you only really want to go short on these things right at the beginning, so as it breaks. So it's kind of like a breakout of a trend line. That's where you want to enter the market. Right here it never really worked for Lazy Boy. You know, it did go up a little bit and then it broke down. Recheck that trend line. That is the best place to enter, but it doesn't always do that. Okay, comes down, breaks out, starts going up again, and it goes up. Just here you can see it sort of faked out there. Okay, and it goes up, goes up, goes up, goes up, keeps going up, and then we break down, and then we come back up, and then we go down. So we went down quite a way recently and then back up. And this ebb and flow of the market is how you make money. Okay, so once it breaks out to go long and go up again, that's where you buy the shares. And then as it breaks that trend and starts going down, it's where either you're going to definitely sell out, or you're going to go short if you also do that type of trading. So it isn't rocket science, is it? It's pretty simple stuff, and anybody can draw a trend line. All you have to do is, like I say, remember, don't buy into an existing trend. You only buy in when it breaks out of an existing trend. So let me show you now one of my favorite examples. So this one here, Okta, this is one that I've recently gone into, and this is because, as you can see, we've been in this sort of downward trend. It was going up for some time. It's been in a downward trend. Now this one is particularly good because it's AI related, so it's like a technology company into the AI company. So I want to be going long these types of stocks right now because obviously AI is very hot, and you're just looking for opportunities like this where we've gone up, we've broken out of a downward trend. Now we're into what looks to be a long trend. Now you can either buy in right here or wait for it to pull back down and retest that former trend line, which it could well do. So basically all I've done is I've bought up a little bit here as it has come above the former trend line and established itself. It's very important that it doesn't just break the line with one of these little wicks that you see here. So if it's broken up with a wick and then closed back down and continued down, you don't want to buy those wicks, okay? You want to wait until the price has actually properly closed above the former trend line, and then it's going to continue up. Now it could well break down. At the moment, this green line that you see, okay, this line right here, I've just put it in for fun. I mean, this isn't actually the trend line. You know, it could end up being down here if the price does come down. We don't know where it's going to be yet. So basically all I'm doing is I've bought in here on these red candles. So as these came down red, I thought, yeah, we'll have some of that. And if it does come all the way back down, great. If not, I'm happy to just buy some more in, because that is a really great company. Now, other ones, this is Victoria's Secret. Yeah, Victoria's Secret, really good company to trade, because it is a sort of annual thing. So every time when it gets to Christmas to February time, the share price goes up because obviously they're making lots of sales, and then into the summer things will sell off, and obviously they're not going to do so good that time of year. So every single year, if you go back through this, you'll normally find that around December time they do have, or in the run up to December, the share price is going to go up. And that's exactly what we had recently. So it came down last year, and then it breaks the trend and starts to go up for Christmas, and then it's gone up even more. I actually sold out here where the red line is, so I had some nice profits on here. I thought I was probably selling the top, but it has gone up even higher. And I think, you know, for February, if you look down here at the earnings and how much it's actually earning, it isn't going up, so it doesn't really justify the massive increase in price. I don't know if there's anything else going on there. We can get into that type of thing in another video, but right now I want to be just looking at some really great examples to show you why this trend following strategy is one of the best. Okay, so down here we have a trend, okay, which was going down, and at the time it was around about $20. Okay, so you can see here it's broken out upwards. You could have bought it here, this thick yellow line in the middle. This is the 200-day moving average, and you can see it didn't come down to bounce off the top of the trend line. It only bounced off the 200 moving average, which is also a very firm support, and it moved up, and then it moved up and moved up, and it still didn't come down. It didn't come down to touch the trend or the 200-day moving average before it moved up even more, and it just kept going up, kept going up, kept going up, and now it's $120. So it's gone from 20 to 120 in literally about 3 or 4 months. Now, I don't know what other sort of thing that you can trade which is like that. And I used to trade a type of asset class which I dare not mention because I also had a YouTube channel back then, which done extremely well, and then got shadow banned in 2022 or 2021, and it completely destroyed me. So I don't want to mention the name of that asset class, but it's kind of similar to that. You can make a lot of money very, very, very quickly if you invest in the smaller end of the market. So if you're investing in stocks which are very cheap, like $1 to $10 stocks, then they can easily 10x and go from $1 to $10, or from $10 to $100. But if you're investing in things like Facebook or Tesla or the usual stuff that the majority of people invest in, you're never really going to see those types of gains, particularly over a 3 or 4 month period, over like 1 quarter or 2 quarters. You're very unlikely to see a 10x gain. So much better to buy long in the smaller end of the market. And if you're looking to go short, you want to be short at the more higher value established stocks. So anyway, in the interest to keep this as short as possible, it's just a little small anchored insights video. We're going to try and do this type of thing every single Wednesday and just have nice short videos for you guys to just help you out in your trading. That's it for now. Catch me in the next.